We are now heading into the month of April. April showers, do they bring May flowers? I'm not a gardener, but I am a seasonal gardener when it comes to looking at the stock market. So what I want to do is I want to start to unearth some seasonal opportunities in the month of April. Now, I consider myself a rules-based trader. I've been a rules-based trader, really, I want to say I've been a rules-based trader now for the last maybe 2 decades. All right. So how long have I been trading? How long have I been officially trading? Since 1986, when I first got involved in the markets. And I'm not talking about successfully. I'm talking about how long I've actually been trading since I was 21 years old. I turned 60 this year. So that is what, 39 years? Maybe half of that has been rules-based trading. And I can tell you this, that really only about the last 10 years, I really called myself a rules-based trader because I didn't know I was trading rules-based patterns even before then. What does a rules-based trader do? They look for sets of objective rules, they back test those objective rules, and they forward test them before really committing real money to the trade. These are the 5 rules-based patterns that I feel are something that you can quantify with data. Trends. Trends are quantifiable with data because you can chop up a trend and you can get the data and extract it from that trend, be able to create rules-based patterns, or what I call if-then statements. Contrarian traders are also rules-based traders, although contrarian trading is a bit harder to do because you've got what's called subjective rules within that contrarian area. I think the best contrarian traders, because there are so many rules as to what constitutes a pullback, what's a 1, 2, 3, 4, 5 wave pattern, what is an ABC correction, what are zigzags. You could take those thousands of rules that are out there. I say you strip away 80 to 90%, and what you're left with, that 10 to 20% of those rules, are the ones worth trading. Same goes for volatility. Same goes for statistical, but I sit down at the bottom there where we look at seasonal patterns. And seasonal patterns are a way of looking at time-based trades. When's the best day to buy? When's the best day to sell? That's what I look at. I learned years ago, commodities have seasonal patterns. Look at low and high demand, everything from oil and gas to chocolate and even orange juice. In fact, that's where I first started understanding seasonality, was I got it from the commodity side. And I decided, could this equate over into stocks? Could it equate to stocks that trade off of more financials and less off of things, commodities? And yes, the answer is I found several stocks that we have patterns in. I put those together and create something I call the money calendar. Money calendar looks like a calendar from the front when I go into it. 10-year patterns, I look for 90% or better on these patterns. Now, when I take the most popular stocks, which is about, okay, so you have tens of thousands of stocks out there. I look at the 4,000 that are optionable, less than 4,000. I take the top 10% of those, and those show up on this list, right? But they only show up on this list if the last 10 years have a pattern that worked 90% of the time during those last 10 years. I can go into a specific day, and I will hunt down these patterns. I look for higher potential return, and I look to reduce risk. And so what I'll do is, by building the money calendar, like I said, I start with the top 325 stocks, minimum of 10 years data, and I look for stocks that produce more money now than they did during their entire life cycle, right? End up with tons of data to hoard, and this is what it looks like. I will take these stocks and I'll look into them and I'll say, all right, what kind of patterns are we looking at? What kind of end date are we looking at? What kind of money can I expect? What kind of accuracy can I expect? And I'll go through those and I will look at these particular pieces of information. And this is what I came up with coming into last week and coming into today. Today, EQT is one of the top trading patterns out now. EQT is a gas company. This is interesting because not only do I have a pattern that starts today and ends on the 2nd of May, but you know what else I see? I see a pattern in an energy stock. Energy stocks have a longer term pattern, a 5-month pattern that starts mid-February and ends in mid-July. So I have a pattern within a pattern, a short-term pattern within a longer-term pattern. How well has this pattern worked? Well, it's worked 10 of the last 10 years. Okay, buying it today, selling it on May 2nd. So what can I do with this information? All right, I can buy stocks. I can buy EQT on today, and I can look to sell it on or around May 2nd. I can then also, if stocks are too expensive, then maybe I look at options. Maybe I look at call options. And I'll determine whether those call options are cheap or expensive based on another barometer I look at. But I can tell you right now, call options will be monetarily cheaper than buying the stock. What we have to determine is the hurdle, the time premium. Are we going to be able to jump above that time premium, make that option flip in value to give us a better return on risk? And potentially, if it's not a call option, I would look at spreads. And then from there, I would determine which one gives me the best opportunities. So speaking of opportunities and summarizing this, when you look at opportunities in April, immediately what pops out here, before we even get into the month, is that oil and energy patterns, they've been seasonal winners so far, and it looks like they're going to continue to be seasonal winners if history repeats itself. EQT is my energy pattern for April. Now, what about two other patterns? I actually put together last week, I did a webinar on my top 3 patterns going into the month of April. If you want those other 2 patterns, then click the link below, right? Got the link will be in the chat box for you. That will open up the recording of the live webinar that I just did a couple of days ago. And if you're watching this on recording instead of live, which many of you do, then the link will be in the description below this video.